Siddharth Khemka, Head of Equity Research at Centrum Broking, is with us as well. Siddharth, thanks so much for joining in. To all the people who are tuning in right now, wondering suddenly what's happened to banks, more importantly to the private banks and IndusInd Bank. Yes, the results were good, but what's the house view at Centrum now? Now that a bit of a rally is behind IndusInd Bank as a result of the good quarter, is it still a good enough investment candidate?
Yeah, hi. Feels good to be on your channel on such a good market, and good afternoon to everybody. We currently don't have a view on IndusInd. However, we have a positive view on the entire private banking space, and based on the results that IndusInd has come out with, we feel the results of other similar private sector banks such as Yes Bank and Kotak Mahindra Bank could be in similar lines, better than expected. One can look at these counters in the days to come for.
33 and counting. What a big move for IndusInd Bank in the session today. Okay, let's first get your ideas out of the way, Siddharth, and then we'll probably talk about some of the other things as well. I think you at the start of the year, people want to know what is it that they can bet on for 2017. You have 2 or 3 names. Without me asking you for one, let's talk about your first top idea for the day. What is it and why do you like it?
Yeah, sure. So for 2017, some of the picks that we have selected, one of them is a mid-cap pharma company named Stride Sashun, market cap of roughly about 10,000 crores. Why we like Stride Sashun is because it's a diversified pharma company, has presence across say APIs, formulations, CRAMS, biopharma. The company has become a fully integrated pharma player post the acquisition merger with Sashun, which also gave it entry into the R&D space. The company has also re-entered into the Australian market after acquiring the second largest generic player in Australia. What we also like about the company is that it has increased its focus to becoming a B2C player in the emerging markets where it had a presence, which would help the company improve margins going forward. So what we expect is the company to report something like 20% revenue CAGR over the next few years, while the PAT is expected to be much higher growth at about 45%. Currently trading at about 18 times on FY18 basis. We believe the company could be a strong buy for 2017.
Right. Siddharth, you also have a call in Naveen Fluorine. Now, what's the target there and what's your rationale?
Yeah, so Naveen Fluorine is another specialty chemical companies which we like. We have been discussing Aarti Industries on your channel for quite some time.
Siddharth, please stay on. Let's get across to the RBI. But Siddharth, tell us, why are Naveen Fluorine of all the specialty chemical companies that are available?
Yeah, so we recently initiated coverage on Naveen Fluorine with an outperformer rating. We have been liking this space for quite some time. It has been one of the top performing sectors of 2016. Naveen Fluorine, apart from the fluorinated business that it does, it has over the years diversified into specialty chemicals as well as CRAMS. It has also set up a JV with Piramal's for the CRAMS business and has been expanding capacities there. So what we feel that the growth that the company has been reporting has been steady and would continue. The company will be one of the least impacted by the current domestic macro economy of demonetization and other stuff. Should continue to report good quarterly numbers. It has healthy balance sheet return ratios of about 19-20%. Currently trading at 18 times, a bit mature, so not much upside from the PE side, but obviously the earnings growth is what the stock should track, and that is why we have an outperformer rating on the stock.
Well, look at what else is doing well. Escorts, I think, has had a good move today. I mean, all the metal names, of course, have done very, very well. Actually, that's a pertinent point. By the way, look at MRF, 55,430. It continues to move up, now at new life highs, obviously, but just, this is Escorts, of course, but look at MRF. It's a brilliant move for a stock which is such a high ticket stock. Now, you know, unless I'm very wrong, MRF, yes, MRF is the most highly valued tick by a margin. The next up is Eicher Motors, which is 23,000, and then Bosch, which is 21. So MRF is the scale of 2x more bigger in the ticket size than any of the other stocks in the country. But that stock continues to move up 4.5% higher. Extremely strong move there by MRF. Siddharth, do you have a thought here on Siddharth Khemka on any of the tire names? Are you buying anything?
We have not been looking at tire companies as of now. Being on the commodity side, they have their own cycle. However, the current up move by most of the tires stocks is something that doesn't go that surprises us, because if you see on the natural rubber prices have been going up. The auto sales are at multi-years low. So something which doesn't go well with the fundamentals, so would stay away for some time until we understand the reasons behind such interest in the tire companies.
Siddharth Khemka, let's talk about Pennar Engineered Building Systems. Why do you like it?
Yeah, so this is among a few of the smaller cap companies that we have among our top picks for 2017. The company is into pre-engineered building solutions. These are basically prefab structures that are used for building warehouses, factories, stuffs like that. Why we like this stock is because the company has expanded capacities over the last few years from about 30,000 tons per annum to 90,000 tons per annum in its Telangana plant, and recently ventured into Gujarat by setting up a 30,000 ton per annum site there. So it has seen consistent increase in orders, which has helped the company grow considerably over the last few years. So this year we believe that the company could be beneficiary of the government's focus on implementation of GST, which would improve the demand from warehouses. It's a play on the private capex cycle recovery in the later half of the year, as well as the government's focus on affordable housing segment, where the company has recently entered through structures that it builds. So it's a long-term buy from us with a target price of about 190, giving a upside of about 20% from a year perspective.
Siddharth Khemka, before we wrap up this discussion, we've spoken about all the key ideas. I want to talk about your thoughts on any of the index large caps and where do you guys at Centrum find favor? A large cap Nifty name or names?
Yeah, so on the overall market, we remain fairly positive for the year 2017. However, at the start of the year, we are fairly cautious as well, given the lot of big events that are likely slated at the beginning end of the year. So right from the budget to the US new president taking over, the US Fed, then the monsoon estimates coming over and all those stuff. So we have used or are advising investors to use the dips in the market to accumulate and keep buying gradually, building portfolios over time. We also are at this point in time suggesting a little bit of keeping cash in the portfolios to benefit from any fall or any opportunities that the market gives. However, for the year, we fairly remain optimistic on the larger indices, Nifty as well as the bank Nifties, and also the markets. We believe Nifty could give anywhere between 10 to 15% return for the year.
Okay, Siddharth, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. Always good having you. We'll take a quick break on that note. Come back and get your wrap of the day's actions. Also get your very important